Okay, this is Brant from tradeguild.blogspot.com, and it's July 10th, and I recently started a new subscriber list for Trade Guild readers. Basically, you donate $25 or whatever you want to the tip jar and email me, let me know that you've done so. We're on the honor system a little bit because PayPal lags, seems like a couple of days, and I send you the new subscriber list when it's ready. It's basically going to be about on a weekly basis depending on circumstances, and occasionally I'll send out updates after the list is out to subscribers. So we're going to take a look at the subscriber list that was sent out June 24th. There's a couple trades that are still in the works, so I'm not going to detail all of them, but I'm going to show you all of them that are completed, good or bad. So one of the things that I talked about in that subscriber list was that financials were looking very weak. I specifically mentioned BSC, and I said that we're going to look, or suggested that we should look for some sort of a weak bounce attempt for opportunities to short within that group. And right now I have investment brokerage, which is the sub-industry of BSC, up on the screen, and the list came out on the 24th, so here's the 25th. And like I said, we were looking for some weak rally attempt to short. So we had a little rally attempt over here, and you can see that it basically stalled out at resistance, which is former support back here. So we had an opportunity to short it here for a little drop, and then again we've had another weak attempt here to do something. It hasn't done anything, and we see almost a 3% drop. So basically financials just have not been looking very good at all. As a matter of fact, they seem to be the poorest performer in the market. If we shorted in here, we've got 4.68% drop on it's not an index, but on a sector, on a group. That's pretty substantial. So let's take a look at some of the ideas that were offered, and the first up is JetBlue, which is JBLU, the ticker, and I suggested that we try to enter on a tag of the rising 10-day moving average. I'll show you that here. It's in yellow, and this was, let me show you where the 24th was. Okay, here's the 25th. So this is the data that we were looking at as the list came out, and we got that opportunity to go long 2 days later, and again 3 days later, right here at the 10-day moving average. That entry would have been around $10.95, $11 or so. So over the next week or so, up in this area, we got an 8% move. Now, I recommended some stops for subscribers of the newsletter. I'm not going to divulge those at this point, but this trade is still potentially open if you wanted to. If you're just going for a swing trade and you took this target, good for you. If you're still in it, you know what the stop would be. Next up is ABCW. Let me pull that up real quick. And this was a potential long. Doesn't look too good there, does it? Basically what we were looking at was some support down here in this area, and we were thinking that maybe if that support held again and we got some sort of a confirmation, and I said this was an ugly chart on the subscriber list, but perhaps there was going to be a reversal that was underway. And let me show you what we were looking at that point. Here's the 24th. This is what we were looking at. Or here's the 24th. That's what we were looking at that point. So we were looking for maybe a harami or something, some sort of reversal and a move up confirmation of that. So basically at this point, this was going to be the stop, but there would have been no entry on this trade anyway because there was no reversal. So like I said, it was an ugly chart, remains an ugly chart, and you know, it's savings and loans, so I don't know, but I guess what can you expect there? Next up is OBCI, and this was a stock that is more typical, let me get rid of that, is more typical of a trade guild pick, being that there's a nice 3C divergence here. It's bottoming out, it's basing in a pennant, it's a cheap stock, and I think part of the reason that you see a lot of these is because they show accumulation a lot better than stocks that are very efficient and have a lot of volume. So we saw this accumulation here again, a very, very thinly traded issue. You know, to get into this, you'd have to kind of piece your way into it, but we had plenty of time to do that. Here was 25th, so let's see, what did I say? I said, specifically, I said, these stocks do nothing most of the time, and then they move 100 or 200% or more. I also mentioned that these stocks have a propensity for shakeouts, false moves. You can see one here, and that move performed a nice shakeout on the stops and on the breakout. So we got another little shakeout over here. In any case, didn't hit our stop, remained in this pennant, and it took a little time, but we got there, up 47% on the close. And earlier today, OBCI was up as much as 100%. So I think if anyone jumped into this stock, the $25 was well worthwhile. A couple other things I just want to mention. You know, is the pennant. That's kind of a typical thing. And if you look at it really on a weekly chart, you see that we had this kind of rounding bottom starting to form here, which is another thing I like. And you can't really see it in the volume. It's distorted because of these high volume days, but it was rounding as well. So good trade there if anybody got into that very thin idea. Next up is WIND, Wind River Systems, and this was the idea behind this was a momentum trade. Let me clean this up a little bit so you can see. And we wanted to buy again near the 10-day moving average, and we had a stop at the trend channel or at a 22-day simple moving average. So let's find the period of time we were looking at here. Okay, so here's when the list came out. We were looking for the 10-day moving average, which I'll show you real quick here in pink. So we got an entry over here on that, and it moved up a little bit, had a nice day. And then if you were paying attention here, you see an evening star confirmed reversal. You probably should have been out of the trade right there, but in case you didn't get out there, the 22-day moving average was right in this area, so you would have been out this day. So either you had a little bit of a gain, or you were out at a loss of about 1.5% on that idea. So that was wind. Next up is NVEC. I'm going to run out of time in the middle of this one. Here's what was going on. We had this pennant, or I'm sorry, it's actually kind of a descending wedge, but if you look at it on a 5-day chart, it looks a lot like a bull flag, and that's what I mentioned. That's what I liked about NVEC. I suggested to wait for the next pullback because of the longer upper wick candle that was prominent here. And I'm going to come back and I want to go over this in a little more detail. So let me come back with another video.